In today's video, what is the best cash flow option in today's market within the Toronto/GTA real estate regions and more? Let's get to it. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. Welcome back to another video from this channel where we discuss all things Toronto/GTA real estate market, news, stats, and trends. Feel free to get in touch with me if you have any further questions with regards to topics covered in this video or any other video. You can find my contact information with regards to my Gmail, my office information and address, and where you can find me on social media on the screen and in the description as well. And if you want to do a little bit of your own homework and due diligence before you do get in touch with me, feel free to just simply type my name into Google my name, go through my Google reviews so you can see some of the feedback my previous and current clients have provided. Anyways, enough of all that self-promotion. Let's get to the point of today's video. As I always do, I put up a poll up on my channel asking the viewers and my clients what your thoughts on this question was, which is, what is the best cash flow option in today's real estate market? And often when I put up a poll on my channel, I'm not surprised at the results, because often the results are, generally speaking, something I agree with and something I always talk about as well. Now, this is the rare exception where I am actually quite surprised that the viewers of this channel, educated real estate enthusiasts who watch other YouTube videos as well, and I know for a fact have bought with me, have sold with me, have talked to me, not all of them, but a good majority have, would actually think that condos are the best cash flow option in today's cooling market with higher interest rates. I mean, have you not seen my most recent and biggest videos where I go through how condominiums are set up to be very, very onerous cash flow options for investors? I mean, I've made these points clear in the past. The conjunction of interest rates, so a highly monthly purely based upon the borrowed amount, and the aggressively increasing maintenances due to simple inflation, make 99% of condominiums horrible cash flow options. Now, if you want to argue that condos still are good with regards to appreciation options, so if you're not a 20% down buyer, if you are a 30 to 50% down buyer, even all cash buyer, condos in today's market where prices are much lower, prices have dropped substantially for all property types, but for condos as well, obviously. If you are that buyer, then yes, a expertly selected condo is a fantastic option for appreciation yield. But for cash flow yield, for the typical mom and pop investor who is buying with 20% down and variable, even with lower prices in today's market, the cash flow deficit is simply going to be untenable for a lot of people. And as a result, if cash flow is your main priority and not appreciation, simply put, it is not a good option. The properties that are actually the best cash flow options in today's market are freehold, detached, semis, and townhomes. Now, why do I say that, and how would I particularly rank those three? Well, first, let me answer the second question. I would rank detached as number one in terms of best cash flow options. I would further rank townhomes actually as number two and semis as number three. Now, why do I say this? Why are freehold properties better cash flow options as opposed to condominiums? Well, I say this based upon not just reviewing the numbers as I do as a real estate agent, but being on the field, working with buyers and sellers, working as a real estate agent, negotiating deals. I see firsthand that a dual income property, such as a detached property in York region, which reason being I'm using this as an example is because I have 3 buyers right now looking for that exact property type in that exact area, which is a vast area. York region is vast. Nonetheless, that's why I'm using it as an example. There are detached properties on the market as of July 1st, when this is being recorded, that can be purchased for $980,000 to $1,020,000 to $1,030,000 that have the ability to yield dual income, where the owner can rent the basement out separate and the upstairs out separate. And these properties where the basement and the upstairs can be rented out separate, meaning there's a separate kitchen and laundry in the basement and a separate kitchen and laundry upstairs, can yield anywhere from 39 to 4,700. I know that's a wide range, but the reason it's such a large range, and trust me, once again, I don't only look at the numbers, I go through property by property by property, is because we're looking vaguely in the range of 980, so sub 1 million to 1.1 million. And not all properties are obviously created equal. So do not get me wrong, you're not going to be cash flow positive by any means. Simply the deficit which you be operating under will be far less for a detached property as opposed to a condominium that may be able to yield 3,500 to 3,700. However, the maintenance and the perpetually increasing nature of the maintenance within the next 3 years at an aggressive fashion, the relative cash flow to total expense of a detached property or even a townhome that has that potential is far, far less than the relative cash flow to expense of a condominium. And this is not to even speak of the fact that we are in a market that is very buyer friendly. I have seen many properties listed at 1.1, 1.2 that can actually be purchased anywhere from $50,000 to $80,000 less than asking. Those same exact properties listed for 1.1, 1.2 in February, where market conditions were at peak points, could have been sold for upwards of 1.3. So the market has simply corrected in terms of prices, obviously of varying degrees in different areas, but in this case, once again, York region, to a very noticeable level in terms of overall average selling prices and median selling prices as well. And let me know what you think in the comments. Do you actually believe that condominiums are better cash flow options for the, typical mom and pop 20% or down investor as opposed to freehold options? Nonetheless, I digress. There's a lot more videos coming out. As always, feel free to subscribe, comment, rate, and review. You can get in touch with me with any questions you may have with regards to Toronto/GTA real estate matters. Find my contact info in the description and on the screen, probably as well. Thank you very much so for watching. Stay safe and stay tuned. Thank you.